The market has moved from Friday's fragile constructive rebound into broader, very short-term upside participation, but short-term structure remains balanced and rotational, so upside into late May and early June still needs confirmation. Welcome back to the AI VLX stream for Tuesday, May 26th. I'm Alex, joined by Ivy, our AI data analyst. Friday's message was repair with late cycle risk. Did the long weekend change the setup?
It improved the immediate tape. Very short-term breadth strengthened meaningfully, and today's data shows broader upside participation than Friday's rebound attempt.
Let's start with the very short-term layer, or VSD.
VSD new highs expanded to 145, while new lows stayed contained at 26. That is a much healthier spread than Friday and shows upside participation taking clearer control in the immediate structure.
So the market is no longer just repairing.
It is doing more than repairing now. VSD uptrend participation is at 55%, and the new high list is much broader across indices, semiconductors, software, transports, retail, and global equity markets.
Where is leadership most visible this morning?
Leadership is concentrated in AI, semiconductors, software, large cap index exposure, growth, transports, and parts of retail. That is a better mix than a narrow defensive rebound.
But not everything is participating.
No, and that is the important qualifier. Crypto-linked vehicles, China-linked names, energy, commodities, and some consumer and financial pockets remain uneven. The tape is stronger, but it is still rotational.
What does the short-term layer, or ST, say now?
ST remains constructive, but not fully clean. ST new highs are still strong at 184. ST new lows remain at 0, and that keeps the broader structure supported.
That sounds better than Friday.
It is better in some ways, but I would not call it a fresh broad expansion yet. ST uptrend participation is only 54%, and ST power breakdowns remain elevated at 49. That tells us stress is still present even as the indices improve.
So the surface is stronger, but the broader structure is still not fully synchronized.
That is the right read. The market has improved from fragile repair into a more convincing rebound, but the short-term layer still looks balanced and rotational rather than early and clean.
How does timing frame the next few sessions?
VSD timing is active now, with major upside clusters around May 26th through 29th. That supports continued upside attempts in the immediate tape.
And on the short-term side?
ST timing extends into May 28th through June 5th, but the setup is balanced rather than strongly directional. Upside can continue, but it likely remains vulnerable to rotation if ST participation does not broaden.
What would confirm that this rebound is becoming more durable?
ST uptrend participation needs to push above 60%, power breakdowns need to keep falling, and ST new lows should remain near 0. Without that combination, the rebound can continue, but it stays less reliable.
And that's today's pre-market update. VSD participation has improved meaningfully since Friday. New highs are back in control, and the market has moved beyond fragile repair. But ST remains balanced, rotational, and not fully confirmed, so upside into late May and early June still depends on broader participation improving from here. Thanks for joining us on the AI VLX stream.